Hello and welcome back to another all-time high day of crypto. My God, we saw Bitcoin go to the moon, and it is always exciting. Now, one funny thing is that crypto Twitter has clearly evolved to a space where many of the participants aren't actually Bitcoin holders. So it's kind of an interesting time to be in the industry to watch Bitcoin, the mother coin, take off while a lot of people are clearly sidelined. We've got some interesting things going on. I'm just going to hop right into it. So as mentioned, we got to celebrate a touch on the all-time highs today with Bitcoin coming in here at around, oh my God, just shy. Look at that, $9,813. That's almost 110K, almost $110,000. That is mind-blowing to me, and it's wild to watch as things happen. What's clearly going on is that institutional adoption is only picking up steam, and I don't know, are we going to see like a $10,000 move in one day? It just feels maybe possible. Now, one thing to note is that the US 20-year Treasury bill, the T-bill, is in a bit of a sticky situation. We saw a pretty aggressive jump after today's auction performed rather poorly, just not many bidders. What this means is that the long-term health of the USD not being viewed in the best light. In fact, it's even being reflected as Moody's just recently downgraded the US from AAA to just sub. And all of this is the market and the market participants kind of coming out and saying, look, the U.S. doesn't look sufficiently sound in their economics, and this massive debt that we've been building up, regardless of what you're seeing on the news, regardless of Doge, of all of these cuts, it's not looking good. And the big, beautiful bill that's being proposed probably not going to move that needle in a significant way. So there is a round fear of being in the USD position, which could be contributing to obviously gold, but maybe Bitcoin. This may be that sort of fraction point between the meat space and the cyberspace where Bitcoin starts to look like a real safe haven. Obviously, it hasn't ever performed as such. So, I mean, hard to tell. Are we going to go in that direction? But that's what it was made for. And, well, I don't know if Satoshi would be super proud of the outcome that he got and where Bitcoin sits today. But for people that did buy and hold early, it's looking pretty interesting. Now, one topic that is coming up over and over again in my private conversations is this concept of the pump.fun of X. We always get the X of Y. When there was STEPN, people were like, oh, move to earn. Well, we have X to earn, Y to earn, Z to earn. People like to get into these rhythms and try to build comparable companies. Now, Pump.Fun, with all of its amazing success and this completely schizoid user page, I mean, they're just raking in the dough. One interesting thing, they're not necessarily great for the crypto ecosystem. They sell things in Solana, they earn money in Solana, and they dump that Solana for cash. I happen to know they're not married to Solana either. But their big breakthrough, what they actually came up with and made everybody realize was possible, was that anyone could mint a token. This is like the era of AI, where now anyone can program computer code, anyone can become an author. This was the big opening that previously you needed to be a pretty solid computer developer. In the era of Ethereum, Solidity was a very difficult code to write under. Those devs were paid quite a nice premium. Then Solana came out with Rust, also a little bit more niche, and launching a coin was still tough. You needed people with a lot of experience. Pump.Fun came out with one simple concept. Anyone can launch a coin. Now, the problem being that the coins have no value, right? In an age of infinity, all of these things hold zero. It's the yin to their yang, but they did come out with this ubiquitous coin launch concept. Of course, there's a ton of platforms competing for this throne at the moment, but I really did enjoy this Blockworks article, which is how 3 projects show the rise of consumer crypto. And what the takeaway is that I really enjoy, Blockworks research also thinks that net new assets are a metric to keep an eye on. And what they're coining NNAs here is the idea that we will begin issuing assets for just everything. Obviously, tokens were novel in the beginning in previous cycles. I can't tell you how many ridiculous players would ring me up and say, hey, we want to tokenize our failing business. Like, a token does not help you in that regard. But as we've gone farther, as we become more inherent to the industry, as we become more internet native, we have the younger generations rising up very familiar with this stuff. We've seen interesting assets come to term and their issuance being basically frictionless. Now, permissionless is the goal of this tech stack. So they go on here and really talk about Pump.Fun, and that unleashed unleashed an onslaught of a follow-on app called Believe, which is really trying to say these are creators that create an app and they have a token attached. Anyway, all of these have their problems and there's no true value underneath. But people are now realizing that we can create these markets around basically anything. There's ideas popping up of equities, of RWAs, of Time.fun is basically a Calendly that people have to pay for, and the mechanics of what is so poignantly termed NNA is beginning to unfold. I think we will see entirely new asset classes begin to take off as that digital layer simply removes the friction. The friction on the creation side always been there. You need to be a traditional finance operative, you need custody, et cetera, et cetera. Now with code, these are much simpler to launch. There's been friction on the buy side. You need to be an accredited investor or qualified purchaser to participate in these things. And maybe we obscure that by actually creating a basket of assets and we can create a metadata receipt. Not true ownership in the sense that TradFi would do it, but who knows? We're going to continue exploring novel solutions. So I think if you're curious, take a moment to dive into this Blockworks piece. I do think they're hitting the nail on the head, and this NNA concept is going to be the unfolding, the flowering of whatever comes next cycle. And of course, this is happening not just on chain level, right? Van Eck launches the Node ETF, which is just, they're doing ETF after ETF, grabbing positions in anything blockchain related. So mining companies, electricity, anything that goes into the manufacturing, the consensus, the compute of blockchain. So even here at the TradFi level, we can begin to see these new assets popping out. It's all pretty wild. Now, last but not least, we have this very unfortunate revelation from Coinbase. They said that somebody exploited their foreign customer support services and actually got detailed data on a lot of their users, including their holdings, their names, their addresses. This is all very dangerous stuff. And this, like many things that we see around the country, is just bad regulation meant to protect people, but really turning out to be a round weapon. So the Bank Secrecy Act, which passed a long time ago, updated the Know Your Client and money laundering laws, which basically said in order to reduce the amount of money laundering, the grift, the washing of capital, you have to collect robust data on everybody trading assets on a platform like Coinbase. Now, obviously, this was meant to help control the flow of illicit money movement. However, all it has done is create these giant honeypots of user data. And as we can see with the 23andMe exploit, obviously with this Coinbase exploit, I mean, these are just treasure troves for scammers. So we've seen recently that the phishing attempts on Coinbase customers has actually spiked enormously recently. And the more people have looked into it, the more they've realized Coinbase has actually had this exploit open for a while. Now, they came out, there's been a demand for a $20 million payment for these things not to be released. And Coinbase, in an attempt to flip the script to run the narrative themselves, has said, no, we will not pay that ransom. We're not doing ransoms, but we will issue a $20 million reward for any white hat hackers that can lead us to these people and their arrest. However, this does not help all the users whose information is now out. There's people who are fund managers, people with massive amounts of wealth, and their address and their names are just out there for anyone to see. This is a terror. KYC, AML, anti-money laundering, is just an absolutely atrocious bill. And the gathering of data, it's just, again, with a digital fortress, you can protect it as much as you want, but somebody only needs to find one crack, one exploit to get in there and get it all out. This is why blockchain technology and ZK, zero knowledge, is going to be so important. We need to know that we can figure out where sources of capital come from without being able to attach those identities. Again, we need identifiers and identities to become separate. We want to be able to approve things. We want to be able to regulate the transaction of money, the flow of money, but we cannot keep building these honeypots for hackers to exploit. It's just unsafe. And in reality, we're making KYC go from know your client to kill your client. This is a very dangerous game to be playing. And this is something that is so consistent with the government, where they pass a bill with good intentions, but it actually has the direly opposite effect. This is going to have to be dealt with at some point. The Bank Secrecy Act is just, it's an assault on the user base. So I do hope that we see something positive come out of this Coinbase data breach. If you want to read a lot more details on it and get a little bit deeper, this Crypto Forensic Investigators is a really good resource from white hats about what they've discovered from this exploit. So if you're concerned, if you're a Coinbase user, I mean, maybe you can check it out here. And that's why I sign off today the same way as always. Guys, be safe. I know the markets are pumping. It's very exciting. Make sure that your OPSEC is tight, that your wallets are not warm, connected to the internet. Maybe take your cryptos and break that seed phrase and move them into different geographical locations. I personally don't keep any crypto anywhere near my home. Maybe a little bit for trading on my phone, but it's just a dinner's worth of value. This is really important. You don't want to lose your money. It's going to be a lot of hard work to gain that, and you're going to go through a lot of stress because these cycles are absolutely insane.